Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Before the most important news of today, firstly we're going to start with the Asian markets, where of course mostly higher they were on Friday as markets awaited key US job data, which of course will offer a key indicator of whether the Federal Reserve will pull the trigger in June. Japan also released April price-adjusted real wages, which of course showed signs of wage increase slowing. Of course, that provided a little bit more information about the wage growth, which is a key Japanese government's effort to drive private consumption and raise inflation, which of course the Japanese yen was also on investors' radar after the dollar-yen fell below the 109 on Thursday. Despite the stronger yen, the Nikkei 225 closed up about 0.4% or about 79.68 points at 16,642, breaking its two-day losing streak. The dollar-yen currency was trading at 108.75 in late Asian trade. European stocks also look set to open higher on Friday as investors turned their attention to a key US job report that of course could hold the key to the Federal Reserve's interest rate hike and its path next month or the one after. US employers were expected to have added about 164,000 in May, according, of course, to a survey. US stocks closed the session higher on Thursday, with healthcare stocks leading ahead of a highly anticipated Nonfarm report. The euro, of course, wallowed near a three-year low against the yen and the dollar, of course, after investors were underwhelmed by the European Central Bank's decision to refrain from making any material changes to its policy mix. Against the dollar, the shared currency was quite steady, of course, this morning at 1.1156. And of course, it remained above a 2.5-month low of 1.1097 logged on Monday and up slightly from the week through, which of course shy of a night high of 1.1221. Gold in the commodity sector was nearly unchanged on Friday, but of course headed for a fifth consecutive weekly decline as the dollar and Asian stocks held firm, and of course the markets awaited the Nonfarm payroll data later in the session. Investors remained cautious ahead of that labor report, of course a strong reading of which could push the Federal Reserve to hike interest rates sooner rather than later. Of course, that is a move that would be bearish for non-interesting pairs, being bearish gold. Gold was nearly flat this morning at 1211.3 per ounce in late Asian session, as of course it touched low of 1206 earlier in the session and remained on track of its fifth straight weekly loss. The Organization of Petroleum Exporting Countries failed to agree to a clear oil output strategy on Thursday, as of course the one country staying against all of it, Iran, insisted on raising production to regain market share lost during years of sanction. Of course, that lifted in January from the US, where of course the US West Texas Intermediate crude futures were down 9 cents at 49.08. The fact that Saudi Arabia, of course, strongly promoted a new higher ceiling sent an important message that it won't open tabs to flood oil markets. And of course, the most important news for today, US non-farm payrolls and unemployment rate coming out at 12:30 GMT. That's all for today. Thank you for watching. See you next time.